There's this retail FOMO that happens, and there's a price point where it hits. I thought we were going to see it last week when we touched 125, 126, when we broke new all-time highs. I think you get into that one, it's a psychological 130, 135, and all of a sudden you're off to the races to 150. And then from there, that's what the cycles do over time. And never forget, having happened and the impact of, I think we will start seeing some supply constraint for sure by the end of the year.
What's going on, guys? Today we got a great episode with Chris Klein. He's the co-founder and COO of Bitcoin IRA. In this conversation, we talk about what is going on in retirement accounts, why you should have one, but then we get into some pretty interesting conversations. What are people doing in these retirement accounts? What are rich people doing to get richer that you can copy? On top of that, we start talking about things like, is patriotism still alive in America? What should you be thinking about? Macro events, gold, silver, Bitcoin, stocks. We got it all covered. Chris is here. Lots of insights. I think you guys will really enjoy it. Here's my latest conversation with Chris Klein. All right, I thought a great place to start the conversation is Bitcoin in people's retirement accounts. That used to be very controversial, very kind of contrarian. Now it's becoming much more popular. You guys are a big part of that. But also I think the government now is becoming much more open to what can you put in your 401k, what can you put in your retirement account. The average American, I think, is very much saying to themselves, wait a second, I want exposure to alternative assets. I want exposure to Bitcoin and cryptocurrencies. I shouldn't be precluded because the government is being paternalistic and saying that for some reason, they know better than I do what I should do with my money. What's interesting to me is you were telling me before we started recording, during market sell-offs, the panic sellers in retirement accounts have pretty much dissolved, completely disappeared. Yeah, absolutely. Explain more what's going on there.
So I think you get, when you're putting it into that retirement setting, you're thinking now decades. You're not thinking minutes, hours, or even weeks or months. You're thinking years. So if you're 40, you're going to start pulling this out in 3, maybe 4 decades, maybe even hand it down to the next generation. So you're in that mentality of when in doubt, zoom out. So when something like last Friday happens, their natural inclination is, let's get some more. This is a time to stack sats, right? And so we see over the years, there's a lot of transaction volume of $1 billion of transactions. It's actually really close to parity as far as buys and sells. But a lot of that is also people taking profits from alts, rolling that over into Bitcoin for longer term holds and things like that.
Now, when you see people putting Bitcoin in there, one of the things I always find fascinating is you said if you're 40, you're going to leave it in there for 3 or 4 decades. They can take it out earlier than that. So do people actually leave their assets in these kind of tax advantaged accounts even after they're able to take it out because they just want to keep compounding with the tax advantage?
Yeah. I mean, obviously with a Roth, you can take it out tax free. We talked about that together before. With a traditional, you want to strategize it, or you want to think through, okay, well, how much should I take out this year? If I'm still earning, you don't really want to be taking big chunks of money out of your retirement because it's income at the end of the day, and that'll increase your tax bill. So the goal is you take it out when you're not working anymore and you keep yourself in that lower 10 to 12% tax bracket.
All right. Now, you previously in an interview, I went deep in the rabbit hole of the internet content. You gave a price prediction of $180,000 for Bitcoin by the end of 2025. We're sitting today somewhere $115,000, give or take. Do you think that we can go from 115 to 180 in, let's call it 2 months?
I think so. I did make that prediction in April when it was at 75,000. So I'm halfway there. So I don't look like a complete fool. But I think there's some things underneath. Obviously, this recent poll just proved to us that leverage is a dangerous drug, right? And it really kind of just collapsed some of these altcoins. But as far as Bitcoin, I was impressed by the resilience it showed over the weekend. Normally, when something like this happens on a Friday, by Monday we're freaking out even worse because the market doesn't close; it's thinly traded. It held pretty strong in the 115 zone. It's dipping a little bit again this week. It's soft. I kind of think of this like the washing machine, like that after it does the original clean and then it kind of soaks everything before it hits the spin cycle. It's kind of like that moment where we're going to be a little bit sideways for a bit. But let's not forget, there's still race to reserve happening all across the world. It's not just the US here, but all kinds of countries are trying to say, okay, I need to counterbalance my overall balance sheet with some hard assets like crypto, as they've done with gold and oil before as a strategic reserve. You add that plus the treasuries, the groups that are going basically full tilt as a digital asset treasury company, following in Saylor's footsteps. That's another piece. But then you and I both know, we've been through enough cycles. There's this retail FOMO that happens, and there's a price point where it hits. I thought we were going to see it last week when we touched 125, 126, when we broke new all-time highs. I think you get into that one, it's a psychological 130, 135, and all of a sudden you're off to the races to 150. And then from there, that's what the cycles do over time. And never forget, having happened and the impact of, I think we will start seeing some supply constraint for sure by the end of the year.
What's fascinating is 110, 120, 125, all these different numbers. it just feels, kind of milestone of importance. It feels psychologically like, hey, we're making progress. Google search results for the word Bitcoin or volume, it's like at near a 5-year low.
Yeah.
It's very much a paradox between like so much noise online, especially on X, in this kind of echo chamber. But then the Google search results are showing no volumes.
Yeah.
How do you pair those two things together?
It's, in being in the crypto business, we notice it for sure. And great word, echo chamber, right? Because I do all kinds of stuff on X now. And it's everybody's talking, but are the outside new entrants coming in? And really, we're in a somewhat of a paradox. I was on NASDAQ yesterday and we were talking about, so gold's at all-time highs, silver's at all-time highs. Well, not all-time highs, but it's soaring. Stocks are soaring. Bitcoin's up strong. When does it break? Where does it break? Is it a zero-sum game still? Will one of these fall off and the others will kind of gobble up that capital? Or is it going to be a race to just even bigger capital? Because the thing we have to remember is part of why every asset class is inflated is we've pumped how much monetary supply into the system over the last few years, just like with real estate as well. So it's a difficult thing. You have to get in front of buyers in different places, and you have to really, guys like you and I are out there pushing that education standard for folks looking at it. I think you're seeing more crypto. The crypto Google search keyword is actually stronger than just Bitcoin. I think the concept of crypto overall has really taken, even though I know you and I are more Bitcoin bulls, has really taken over some of that attention.
That's interesting. So you're seeing when you guys are doing your ad spend, like performance marketing stuff, or even where traffic's coming from, you actually see more people responding to the word crypto than you do the word Bitcoin.
Yep. And particular coins too. I mean, we all know the XRP army is really strong. If you're on X, the XRP army's out there. Mm-hmm. So particular assets as well, and looking at that. And then also ETFs, we usually combine them with crypto ETFs, Bitcoin ETFs. People are still searching access for this. Vanguard just basically did a 180. Back when the ETFs came out, they said, no way, we're traditional, old school house. This is not the space. And
that
now,
guy's the former CEO.
Yeah, the former CEO. And now they've changed course because the demand's there. And if you got enough capital flight out of your custodian or your trust, then you're going to change course eventually. Mm-hmm. But we do have, everything's kind of paused. This shutdown, I think crypto guys went nuts with the shutdown. They're like, oh yeah, the government's down. This is why we're independents and we're libertarians and the Bitcoin mentality. But now there's this queue that's stacking up because the government, all the 3-letter agencies aren't getting through the ETF queues and all those things. Like we had all this great Genius Act, Clarity Act, and now we're back into the clarity's not as clear as it was, say, a few months ago. And we've got to get through this shutdown that's happening.
I do think actually there is some correlation between the government shutdown and asset prices. Kind of, they're still sideways to slightly up, but once you do get more access, I saw. Most recently, there's somebody who filed for 5x levered ETFs.
Oh boy.
That feels like maybe some dangerous things will happen.
Does that guy also own a casino?
Possibly. But those aren't going to get approved until the government opens back up, right? And so like there's a lot of these things that I think you just got to wait till the government opens up, and then kind of leverage has been cleared out through these drawdowns. You open up the market and you're ready to rock and roll.
But also there's a mental psyche that I'm noticing of the fatigue of the average American with this shutdown stuff. This isn't the first one. I mean, I was just joking that Clinton had one of these as well. This was when he was answering the phones. Remember, they made the whole parody about him answering the phones because nobody was working because the Republicans had shut it down. And I think Americans are kind of starting to get fatigued of all this. This isn't really, in my opinion, if this goes on much longer, we're halfway to the longest one. The longest one was 35 days. We're at day 16 right now. If we go well past that, Americans at some point are going to start thinking this isn't a red versus blue thing. I think it's more a orange versus green thing, which is, let's not forget, everybody, even though it is the Federal Reserve and they're separate from the government itself, everybody just couples the government, the federal government as a whole. They're going to say, wait a minute, these guys can't even agree on passing a bill, which is arguably going to be the largest bill as far as a budget ever. And that keeps happening. How are they managing money? Oh, they're just printing the crap out of it. And that's why I love Bitcoin and the finite nature of it and the scarcity of it. And I think those things, they take time. That paradigm shift takes time to click. But when it does click, then you'll start seeing those Bitcoin searches start to increase again.
Today's episode is brought to you by Citizenship. If you're a Bitcoiner thinking about global mobility and securing a true plan B, listen up. Portugal is one of the most attractive golden visa programs in the world, and Citizenship has built the ideal pathway to get you there. They're behind the first Bitcoin ecosystem golden visa fund. It's a private equity fund that purchases Bitcoin via a local company. That gives you exposure to Bitcoin while qualifying you for the golden visa and citizenship in just 5 years. Plus, here's what makes this a no-brainer. Citizenship has the lowest fee structure of any golden visa fund in Portugal. And because their team handles everything in-house, you skip the usual friction and bloated fundraising costs of other funds. So if you're serious about sovereign flexibility, now's the moment to act. Go to citizenship.com/pomp and book a free strategy call with their team. Again, that's citizenship.com/pomp. Go check them out today. Yeah, it's very fascinating that the government shutdown feels like it is obviously affecting people, but it doesn't feel like most people are talking about it affecting people.
Yeah.
Right. It's kind of, they're talking about the politics of it. That'll never go away. But usually you see the stories like, oh, the government shut down, like this group of people are being hurt. This group of people is, aren't getting paid, whatever. I don't know. I can't describe. Like, it's just very weird to me, this whole situation.
Yeah, it's almost like it's shut down and nobody cares because it just keeps happening. It's like every year or so, once that...
The market doesn't care. The market hasn't cratered or anything, right?
No, nothing major has happened in that space. But eventually, I think after 30 days, the stopgaps start to fall off. So people's jobs and their income will be impacted. The other thing is, in the past shutdowns, once it turned back on, all the people that were getting not paid, basically furloughed, would get a big lump sum of catch up. And now there's a law in place from Trump's first administration where it actually tapers in. So they won't actually just get the money back right away. So I think those sad stories of this is impacting these people, they're coming. I think people are just waiting to get really strong behind them because, again, the attention span of the average American is about 32 seconds, right?
32, you're being gracious.
Nice.
There was an article recently in the Wall Street Journal that said that there are more people who are on the lower end of the economic ladder that are now participating in the stock market than ever before. Yes. My takeaway from that was, so this is a good thing. This is positive, right? More people are participating in capitalism. More people have the benefit of inflation is inflating their assets. They're not just saving and having their wealth stolen. How does that play into something like what you guys are doing with these retirement accounts? Like, it does feel like those stories are intertwined in a way where more people are getting access to the market. I'm assuming more people are also trying to use different tax advantage vehicles in order to benefit. Unfortunately,
no. That's that financial literacy gap that I think is driving the overall retirement gap. Yes, more people are participating than ever before, but there's a literacy gap of understanding that these tools are really helpful for you. If you're going to take and put $7,000 away every year and you want to get into stocks, bonds, mutual funds, cryptocurrency, gold, silver, whatever it might be, putting it in a Roth or a traditional, you get a tax advantage. You avoid capital gains taxes, that nasty 37% that you can get every time you sell or change assets by using these tools. Scary enough, I think they just calculated it's about $4 trillion is the total retirement gap. So how much people are going to need to retire and how much they actually have, because we're living longer than we ever have, well past retirement age. And in fact, 11,000 Americans are turning 65 every day. So we're aging as a generation. And a third of near retirees, so people that are coming up on that 65, 70, they're actually terrified that they're going to outlast their money. And this all comes back to only half of Americans are participating in retirement plans. So yes, encouraging that they're, instead of putting it under the mattress or in a bank, not making anything versus inflation and currency debasement, they're investing, but they're not necessarily using the tools they should be using for long-term planning. Because also the beauty of putting it over in that retirement account is you're kind of locking it away from yourself. It's not something you're just going to go sell off in an emergency. It's not an emergency fund. You're locking it up for a long-term mentality.
But I think that's maybe why people are scared, right? Is if you don't have lots of prosperity, or you're just starting to make some money, the idea of taking some of it and like basically putting it on the sidelines in an illiquid structure, that actually may be kind of the psychological hurdle, right?
Yeah, well, because that's all they see is that, okay, well, it's in lock and key and I can't touch it. You can get it out. There's a penalty for it, but you can get it out. It's not like it's locked in there forever. But they're not seeing the other half of it is there's a reason. The government gives me an incentive for that, which they hardly ever give us incentives, is I put the money aside, it lowers my tax bill for the year. So there's additional savings for you in your overall financial landscape. And I can trade all the time. And not every year I got to go to my tax guy and say, oh, I bought NVIDIA and I sold it for Apple and I did this. this. And every time those gains, it really does. I mean, 37 is the highest amount, but you're taking away somewhere between 20 to 30% of every win that you have. So if you're making $10,000 on a trade, you're really only making 7,500 at the end of the day if you're doing it outside those. So it's a lack of understanding of the importance of using the tool.
Do you guys see a lot of people trading, or most people just kind of buy and hold in these accounts?
So it's a mix. Actually, we have our year-end planning next week, and we're looking at that data right now for the year. You're seeing on average in a lifetime, most clients are around 7 to 10 transactions that they do. And
that's it?
Yeah. And that's it.
Oh
that's across. Yeah. But
that's like just, buying something and holding it forever.
Exactly. But that's the mentality of most Bitcoin hodlers, right? That's their thing. But there are some that do a lot. There's folks that do, there's the upper quartile, the top 20% probably do about 40 to 50 trades in a year. And they're moving things around, changing, looking at, we have 87 coins now, so they're playing different games. We did just launch staking, which I think I told you we were working on that when we saw each other earlier this year. You've got 4 different tokens: Solana, Ethereum, Polkadot, and Cardano that you can stake with now. I think the highest yield is somewhere around 8%. And the great part is you get paid in the coin that you're staking. I like this because it's not like what happened back in 22 and 23 where rehypothecation, leverage on leverage. The assets are staying inside of your IRA in wallet. They're just being dedicated to build a better blockchain and help manage the network and all the transactions. And you're getting rewarded for basically thinking long term. And that when they bring it in and then they stake, that's even another layer of, okay, I'm in this for the longer haul. Even though you can unstake whenever you want to, it's kind of like putting cash into annuity. It's going to be there for a year or two before I pull it out.
And when people are doing the staking, there's no tax ramifications of the stake revenue?
No, all that.
So it just sits there and just keeps compounding.
Keeps coming back in and compounds. Warren Buffett would love us.
Yeah. What about equities? Is there any difference in terms of how people are using any of that stuff?
So what we build is a self-directed IRA. So obviously Bitcoin IRA is the flagship. We've got all 87 different digital currencies that are available, but we also have gold and silver that people are taking like long-term and tucking aside for that stableness. Gold's having a heck of a year, right? Mm-hmm. And silver too. Some folks are rolling it that you can do real estate, you can do land. We even have a guy that does farm tractors. I think I told you about that guy where he leases them and gets that. And then there are folks that are kind of going back and forth. Okay, this portion's in crypto, but this portion I want in, and because the tech stocks and stock market's doing really well. So there's no reason to. A diversified approach has that modern portfolio theory, right? It's got some of the alternatives. It's got some of the bread and butter in the stocks. And then it's got, long-term indexes and treasury yields.
Yeah. I wonder if I see all the strategy keeps talking about their STRC. And I haven't spent a ton of time on it, but I just see people talking about it and this fact that, it's 10+% yield or whatever. And so I got to imagine there's a very large group of people out there that they want yield, especially if it's, in a tax advantage way. And
the stable coin game right now with the rewards, I was in a bunch of board meetings on the West Coast and big banks and regional banks. And that's all they're really worried about is that because they know that if stable coins are more lucrative than their very low interest bearing accounts that they're offering, they've got to find a way to compete. Well, most banks, as you know, they run off the float. That's where a lot of their revenue comes from, and then transactions. But they come in, you put the deposits in, they're not paying you a lot, but there's a lot being made behind the scenes above the Fed rate as far as how they're working it. Stable coins, the rewards, the way they're doing this, I think that's going to be the battle of 26 is because you can't forget to follow the money. At the end of the day, the bankers, big banks are just like big pharma, big oil, they're a big lobby, and they fund a lot of campaigns out there. So how will that battle be settled? Will there be JP coin and all these other banks have their own coins? How does that settlement work and liquidity work between all of those? Or is there more of an adoption between the ones that the existing stable coins that are out there? I think that's going to be that, and tokenization of real world assets are going to be the two big themes for next year.
Mm-hmm. And in the tokenization stuff, how does that play into these retirement accounts? Like, are they going to be able to do certain things outside of just the tax advantage that maybe they couldn't do elsewhere?
Well, it lowers the barrier to entry, right? So not a lot of people have enough money inside of their retirement account, unless you're Peter Thiel, to go and buy a skyscraper or get in on these large deals that have great yield. Tokenization is going to lower that barrier to entry. It's going to make it fractionalized. And we're working with groups now on how that would look, but all of that fits inside of the retirement plan. So instead of having to buy a whole farm or a whole building, you can buy a piece of it. Just like, there's groups out there like Acre Trader's a good one that you can buy little pieces of an acre of land and you get the yield on the harvest twice a year, those types of things. All that is functional inside the IRA. And then you got the secondary market, right? Once it's fractionalized and tokenized, now what usually is like liquidity just sits in a building for years. Now it's moving and there's a secondary market to it.
When you look at all of these users, like who is playing in crypto and doing it in a way that, maybe they wouldn't be doing otherwise. And what I mean by this is, okay, so you got tokenization, you've got Bitcoin, you've got staking, you've got all these kind of different things. I'm fascinated by the rise of the retail investor.
Yep.
And it feels like the people who are coming to you are not, just putting their stuff on autopilot because some corporation told them, hey, this is what you're supposed to be doing. Like, these people are engaged, they're informed, they are probably a little bit wealthier than the average American. And they're trying to figure out, how do I allocate my resources? So like, what's driving them psychologically, you think, to do this?
Yeah, I think it's a few things. I think it's seeking the alternatives, and diversification is a big thing. I do think there is a fear of currency overall, whether they just, especially this year is the worst year in like 40 years for the US dollar. People don't quite click that. Like, average Joe is like, well, I still have $100,000 in my bank account, but that doesn't come full circle for everybody. It's like, well, it doesn't go as far. It goes about 10% less as far as its purchasing power in just 1 year, which is crazy. So I think that's a piece of it. And also, this is an era where we're more empowered and like engaged than ever before. I even use the word insatiable with our clients. They want more. They want new things. They want complete control. I think like 80% of our transactions happen after hours and on weekends or holidays. So they're not really the 9 to 5 trader. Yeah, 80% of our transactions.
80% of the transactions happening
outside of traditional stock market hours.
Interesting.
And so they're trade, and markets move and crazy. I mean, we've seen some Sundays, right? And even Fridays was a great example, where then through the weekend. So a lot of transaction volume happening outside the traditional. So these are your people that are working their jobs, and they're instead of just going to some RIA or financial advisor and saying, take my money and do what you want with it, and I'll pay you a management fee, just make sure that number's up every year when I see you. That era is kind of shifting. People are really taking control of things, which I think, I'm just like you, I think it's amazing, because it just shows that capitalism is starting to spread to the masses more than just small pockets.
Now, one of the things I love to do on this show is help people figure out where they got lost money, make money, figure out something to better their financial life. This 401k kind of trend of forgotten plans or forgotten 401ks. Explain what's happening, and then maybe we could talk to people about what should they do just to make sure that they don't actually kind of suffer from this.
Absolutely. So people forget that once you leave your job, your 401k that you were doing, whether you were contributing or your company was matching it through your paycheck, well, that paycheck's not there anymore. So that funds just kind of sits languishing. They don't know that they actually have the power to move it, or they just forget about it. And they're like, oh, it was only a couple $1,000s or what. It's still your money. And I always say it's kind of like leaving your favorite hoodie at your ex-girlfriend's house. It's just, you don't do that, right? It's your favorite, or quarter zip. I'm a quarter zip guy. You don't leave those things behind. And so it's actually up to $2.1 trillion have been left behind in old 401ks. And that's up 30% in just 2 years, because I think as people are changing jobs more, we're going to gig economy. People are just leaving jobs and not forgetting, oh, I have that 401k there. You can control it. So best thing you do, if you completely forgot, do I have one? There are tools out there like Beagle is a good one. And it's like the bloodhound dog that goes and seeks. You'll give it some information. It'll go find any 401ks that are registered under your name or your social. Once you figure out where that's at, or you do know you have like a statement from a past one, it's called an employee-sponsored rollover. So you have 401ks, 403bs, thrift savings plans. I know you had one of those as a soldier. 457s. All these are employee-sponsored plans that can roll over into a IRA. So you can put it in, and there's traditional versions and Roth versions. Once you do that, especially if you put it at Bitcoin IRA, now you have access to 87 different cryptocurrencies. So instead of leaving something behind at a 401k provider that's probably in generic ABC funds, maybe just sitting in cash doing nothing, you can empower yourself to say, hey, I'm going to take that and roll that over. And then you can continue to contribute on your own every year to grow that nest egg over time.
Today's episode is brought to you by Xapo Bank. Are you a Bitcoiner looking for yield, security, and liquidity? Xapo Bank is a fully licensed private bank and a virtual asset service provider. They're regulated in Gibraltar, and they've built one of the most trusted vaults for Bitcoin custody since 2013. And now they offer so much more too. Security is just the start. With Xapo Bank, your Bitcoin can grow every single day. Members earn 3.75% APY on USD deposits and 0.5% APY on Bitcoin balances. accounts. And that interest is paid daily in Bitcoin. You can also spend worldwide with their premium debit card, earning up to 1% cash back in Bitcoin and no foreign exchange fees. And when you need liquidity, you can borrow against your Bitcoin up to $1 million instantly with no hidden fees and no early repayment penalties. That means you can access cash without selling your Bitcoin. And if you ever need help, you can talk to a real person too. Zappo's expert team is available 24/7 to answer your questions. Pomp podcast listeners like you who sign up as new users will receive $150 off their first year of membership. Go to zappobank.com/pomp to learn more and sign up today. That's XAPObank.com/pomp. Go check it out today. This episode is brought to you by BitLayer. BitLayer is taking Bitcoin beyond just a store of value. For the first time, you can put your Bitcoin to work, earning yield while staying true to its core principles of security and decentralization. BitLayer is making Bitcoin DeFi a reality. Learn more at x.com/BitLayerLabs. Again, that's x.com/BitLayerLabs. It's fascinating to me that $2.1 trillion could be left behind. But I'm sitting here thinking, you mentioned the military. It's like, yeah, I probably do have something sitting there that, I was just a young guy who wasn't paying attention. And I don't know, maybe I did leave a thrift savings.
Probably did. I think it's automated with the military. They make sure that you're opting into that because it's a great tool.
Mm-hmm. All right, let's talk a little bit about gold. You mentioned that you guys have gold available on the platform. We've had this epic rise in the asset. I think people are surprised Bitcoin has not kept up or surpassed gold.
But you had a great tweet the other day because I saw you had Schiff on, by the way, and I actually did a short
Peter
video
Schiff.
and he's a great guy, but there's these two worlds. I think they're harmonious with each other. And I think the way you put it is that if you look at it in terms of Bitcoin price, is that how it was?
Oh, yeah.
That it's actually behind?
Didn't like that.
I'm sure they didn't.
They did not like that. So for context for everyone, I tweeted Phil Rosen made a nice chart that was gold's price in Bitcoin purchasing power. And easy to say gold's purchasing power has gone down significantly in Bitcoin terms.
In terms of Bitcoin terms.
It's down like 84%. To put that in context, the S&P is up 100% since 2020. It is down 88% in Bitcoin terms.
Median house also is
Median
down.
house is down significantly. Everything's down against.
And when you look at it in terms, it's a paradigm shift, right? You look at it in terms of that, is it really worth more, or is it just because we pumped so much money into this ecosystem?
Correct.
And it's all boats are rising from that.
Well, the gold bugs did not like me saying that. I think the words I used were, it's been a disastrous investment.
Oh, wow.
Priced in Bitcoin. Well,
were you and Peter in the same room when you said that?
No, it's down 84% if you use Bitcoin as the unit of account. Now, of course, there's people who immediately come out and say, well, Nvidia stock, Bitcoin is down 50%, right? So you can play this game all day long. But my point was just like, if Bitcoin is the hurdle rate, it's finite, it can't be debased, it can't be more created of it by any one person or group, then it's a pretty good measuring stick.
Yeah.
And actually gold has gone down. And so, I don't know. It's we are brothers in the same fight against currency debasement, but at the same time, there seems to be a divide in terms of people who are 100% Bitcoin versus 100% gold. There's a lot of people in the middle, but 100%, kind of.
Myself personally, I have a little bit of all of them. So I hold every crypto asset we have because I'm the tester, right? When new coins come in, I buy and sell. I don't have a lot of all of them. Some of the
you don't have $1 million of all 87 coins each.
No, I don't. I wish. I think we would probably be retired together by now on that. But I have heavy in the Bitcoin, Ethereum, the blue chips. And having some gold and silver. What's nice about new age gold, especially like the one that we have on our platform, is it's fractionalized, so you can get it down to the 10th decimal point, just like Satoshi's in Bitcoin. And it also moves very quickly. I had some old gold at the end of last year, well, not old gold, but physical gold coins and silver coins. And I know the industry pretty well. And it still took almost 3 weeks to get them shipped out, categorized and inventorized, and then payment made and payments coming.
Oh, wow.
And that's a long time. And I mean, if time is money, that's a long time of waiting for that process to take place. With the new digital versions of it, it's all backed by physical gold sitting at a vault and a depository audited by blockchain. And then the blockchain itself is saying, yes, these coins have gone in or gone out. So that's the future of it. And I have some of that. For me, I'm not a gold bug. I'm definitely a Bitcoin bull. But I think that they are harmonious with each other. It's just, we always have to have something to argue about, right? I mean, that's America today. I was at NASDAQ yesterday and the moderator said something about how crazy do you think it would be if 9/11 happened now and the way the world is? Like, I mean, we all came together as Americans the day after that. But would that happen today as divisive as we are as a country?
What do you think?
Probably not. I think people would be arguing whether the towers actually fell. Like there'd be somebody out there that says they didn't fall. They'll be back tomorrow. That's how we just find these, and it's not just two sides. It's these, we find our corner to sit in and we just put the line in the sand and we stick to where we're at as an individual. And so much social media out there.
I think I disagree. I think that people would come together.
You think?
Because, so if you think of the Charlie Kirk situation, if he was not political, I think you would have found both sides coming together, a lot more. There's something about your side versus my side. Mm-hmm. There's something in the political culture today of it's me versus you. I was thinking about this recently because you know who John Fetterman is?
I recognize the name.
Okay, so John Fetterman, politician out of Pennsylvania, and he's the guy who wears the hoodie all the time, right? Yeah. And he was on stage at this event that Chris Cuomo did at the Kennedy Center in Washington, D.C. And he had all kinds of people. He had Bill O'Reilly. He had Stephen A. Smith. He had all these people, right? Ro Khanna was there. I mean, right, left, everything in between. But he had John Fetterman. And Fetterman was asked about the government shutdown. And he basically was like, look, this is stupid. We should not shut the government down. Then they asked him about Israel, Hamas, and the peace deal. And he said, I don't understand why my party can't say, good job, President Trump, you did this. And somebody asked him, like, well, do you think Kamala Harris could have done it? And he's like, what are we talking like
hypothetical.
He did it.
Yep.
We should give him credit for it, right? But then he turned and he had good things to say about Democrats. He's a Democrat, right? And also he had critiques of Republicans. So like it was a very rational kind of centrist thing where he was just like, look, when somebody does something good, we should all agree that it's a good thing. When somebody does something that's bad, we should call it out, critique it, etc. And he's like, by the way, I'm a Democrat, but doesn't preclude me from saying good job getting the hostages released, right? At the same time, it doesn't preclude me from saying there's other things that you're doing that you shouldn't be doing as an administration. So I thought it was just a very unique voice coming from
a breath of fresh air.
Every time I've heard him talk for the last couple of weeks, I've just been much more impressed in terms of his ability to say it. Now, when he first showed up and was wearing the hoodie and everything, you're like, hey, man, who is this guy, right? But I was very impressed by that. Now, the reason why I bring that up is if you go and you look at what happened at 9/11, there was people from every walk of life, from a janitor to the CEOs. There was people who survived. There were people who didn't survive. There were people, especially in the Northeast, who they knew someone. And if they didn't know somebody who was in the tower, they knew somebody who was in the tower or who was related to somebody in the tower, right? It was Republicans and Democrats, men and women. It was every religion. It just affected on such a broad basis. I think that type of stuff really pulls people together.
Yeah.
If it was, unfortunately, something bad happened to only Republicans or only Democrats, I think you would get the drawing of the line. Yeah. So I think that it's this weird dynamic where people are much more empathetic when it affects the folks that they say that could have been me.
Yeah.
Or it's people I knew.
They feel like they're looking in the mirror.
Correct. And I think that with 9/11 in particular, there was something that was humanizing about they went to work.
And they didn't come home.
And they didn't come home. And it didn't matter who they were.
Yeah.
It didn't matter what their job was. There's all kinds of industries in the building, right? All these different components. And so I think that is, I would like to believe that there's this undying patriotism.
I hope it doesn't take a national tragedy to start bridging these gaps. I hope there's more centrist views and those types of things. I'm an orange guy. I'm not a blue or a red guy. I'm an orange guy at the end of the day. And I think, I see pros and cons on both sides for sure. Obviously, as a crypto guy, I love seeing the change, the pendulum swing of regulation where we're getting a chance to prove to the world we can do some really amazing things with this technology instead of waiting in line at the 3-letter agencies for them never to respond with a letter and kind of just act like we don't exist. So I'm encouraged by that. But that pendulum swings. It'll keep going back and forth, especially after things like Friday. And if you see leverage get out of hand, they come in with very big, broad strokes too. The government doesn't have a fine pen. They have a big black marker and they just say, nope, this is gone or this is gone kind of thing. So, but barring a national tragedy, I think Bitcoin is one of those things that can start bringing us together. I'm very interested. You probably have the same. I was joking with your Phil and John last night of what's Thanksgiving dinner at the Pomp house like. All right. But I always think about, the been doing this a decade, every Thanksgiving or Christmas, it's always a little bit of different temperature going into the holidays with our families of what's it going to be like around the table? Are they, because like you said, that search volume's down. Are people still interested? What will we be
with
talking
Bitcoin
about?
specifically?
With Bitcoin specifically, what will we be talking about? I mean, I had years where they were like, I can't believe you didn't tell me about this. Or there was like 17, 18. And then it was, are you okay? In 19. And then eventually over the years, it's always kind of a little bit different of a narrative at Thanksgiving. So you'll have to tell me how it goes at yours. I heard you guys are very intellectually solid arguers, is what they said. You guys,
if you grew up in a family of 5 boys who all somehow figured out what they wanted to do in life, yeah, you get pretty good at arguing.
Absolutely.
It's I credit all the time. I've talked about it a million times that when I do television and all of a sudden it kind of whips back and forth, and I'm like, this was the dinner table when I grew up, right? Like it's there is something about just constantly having to defend your ideas or convince other people to do something where you just get better at it.
Yeah.
Right. And I think that is,
Are there any lawyers in the family?
No
lawyers.
No. But I think Bitcoiners are used to this, right? I mean, how many times have people? How
many times have we been called dead?
Well, just they've tried to convince someone about Bitcoin, and then there's no conversion to it, right? And so then they try again. And they're like, dude, my argument's not working.
Yeah.
I got to change it. I got to improve it. I got to figure it right. And then eventually they figure out, stop talking about Bitcoin, start talking about the problem.
Yeah.
When somebody buys into the problem, then explain the solution. Right.
Exactly.
And that seems to be working.
And that's true. Well, not even at the dining room table. It's, I've been around New York all week. I went to the Museum of Ice Cream with my daughter. You put a little name tag
cool,
on.
Right?
It's really cool. And you put a little name tag. So I put Bitcoin Breeze as my name. And of course, all the other dads that are out there getting the old fashioned drink over at the bar in the first stop. They're like, hey, what did you think about the crash? And I was like, I don't know if you can call it a crash. I mean, yes, it was a liquidity event, but we're still holding strong at 112, 115 right now. We're just gotten so big that $19 billion of liquidation seems large, but it's because we're such a big space now. But then you'll go, I was in the elevator leaving the hotel to come here today, and I had my Bitcoin IRA vest on, and they're like, just never going to understand that. So it's both sides. There's people
older or younger.
It was younger dads at the Bitcoin Museum, or not the Museum of Ice Cream, and then it was older folks in the elevator today.
Bitcoiners, we walk in anywhere, it just becomes a Bitcoin.
It is. Right? I mean, it's like you wear the color orange, and it's like, all right, it's off to the races. We can start a discourse.
Yeah, I love it. All right, help me understand Bitcoin IRA. I've been told that you guys have some specials for people who are watching this.
For Pomp listeners, for your audience. So we did run at the beginning of the year. We had the Pomp special. I went to my board of directors. I said, hey, I'm going back to see Pomp. I'd love to be able to come with something in my hands to offer. So they are allowing me to turn that back on for Pomp audience. So it's up to $1,000 in rewards for opening your account. All you have to do is use the link that's provided in your show, or if you call, don't forget, we have Real Crypto, Real People. If you call 877-936-7175 and tell them you're with Pomp, then you'll get that special. And I added sprinkled a little sizzle on top of it. It's holiday season's coming, gifting season's coming. We have a great Bitcoin IRA swag store. In fact, we just put a HODL onesies in place, so you can get some for your twins. Congratulations. But great HODL swag. The nest egg is the O. We've got all kinds of things, mugs, travel mugs, Stanleys, those things. So you'll get a free gift as well. You'll get a gift card to go and get something for yourself, or for maybe one of those family members you need to convince of Bitcoin for the holidays.
So if somebody opens an account, they can get up to $1,000 worth of rewards in terms of opening the account. And then also there's a gift card that they then can go and go
to the shop and get something.
That's a pretty good deal.
Yep, absolutely.
All right.
It's pretty good looking stuff.
What do they have to do? They go to the website and
bitcoinira.com/pomp. Okay. And you can either download the app online or open up the website on your desktop. And it's about 2-3 minutes to open up an account. And then our team will actually kick in. You'll meet one of our executives that's been doing this for decades, be able to sit because not all retirements are equal, right? Everybody's got some 457s, 403Bs, TSPs. So we'll help guide you in funding the account, and then it's off to the races, and you can trade 24/7, 365. And if you're like most people, you're probably doing it on nights and weekends.
I love it. It's a very good strategy to come here and bring stuff for the listeners. Right. You tend to be a fan favorite afterwards. And last time you did that, I see that you paid attention and repeated.
And thousands of your audience has joined us. So we love them. They're great. It's great to have fellow like-minded people that are looking for, I love Bitcoin, I love crypto. I really need to start using these tax advantage tools that the government gives me.
Well, I think a big part of it is, obviously people like the assets, but as they learn about the tax advantage accounts, they realize, hey, maybe I actually have a 401k from a job or, whatever. I haven't been intentional about getting as much money into it as possible and then managing that capital. And I think that once people start to think through that, then that completely changes.
Absolutely.
All right. Well, I appreciate it very much. Thank you. You're always fun to talk to, but come with very unique insights. Like the 80% of the trades being outside of normal trading hours makes sense in hindsight, and then good thought starter on are we actually patriotic anymore or not?
That's good. That was a good discourse, buddy. I appreciate it. Every time I come here, I enjoy it.
All right. We'll do it again soon.